Good afternoon. Earlier today, the Supreme Court upheld the constitutionality of the Affordable Care Act, the name of the health care reform we passed 2 years ago. In doing so, they've reaffirmed a fundamental principle that here in America, in the wealthiest nation on earth, no illness or accident should lead to any family's financial ruin. I know there will be a lot of discussion today about the politics of all this, about who won and who lost. That's how these things tend to be viewed here in Washington. But that discussion completely misses the point. Whatever the politics, today's decision was a victory for people all over this country whose lives will be more secure because of this law and the Supreme Court's decision to uphold it.
Let's face it, folks, the new healthcare reform law is complex. It runs about 1,000 pages, even in tiny print, so it's no surprise that very few Americans have actually read it. But it's about to affect all of us, and many have been wondering what it will mean for our health, our wallets, and our country. Let's say we take all 310 million Americans and squish us down to just 25 people. Yep, each of these folks would represent about 12 million of us, and this is pretty much what we'd look like. Polls show about 3 out of 10 of us say healthcare reform will make us better off. A similar number say worse off. And a similar number again say it won't make much difference at all. Some of us don't know what to think. I guess you could say we're kind of split on this one. But no matter where you stand on the issue, it's likely you're thinking, hello, I got some basic questions still unanswered here. And you deserve real answers, not the partisan rhetoric and spin we've been flooded with. So let's break down what the reform law does and doesn't do and what it will cost. If you want to read the whole law, go ahead, but watching this video is the next best thing. Ready to jump in? Let's begin with the problems in our current healthcare system. Problem number one is what problem number one usually is: money. Most people agree that health insurance policies are too expensive. For a family, the average premium is almost $14,000 a year and growing. Premiums have doubled over the last 9 years, ballooning way faster than inflation. Plus, our population is aging, meaning more people with more health problems. So healthcare costs are the fastest growing part of the federal budget. The second problem is that the system is full of holes, like the fact that people buying insurance on their own can be turned down for having a pre-existing health condition. Small businesses may be charged extra if some of the workers are sick, making insurance unaffordable. And some insurance policies have a lifetime limit on benefits. After that, you're out of luck. That means some of the people least likely to have coverage are the ones who need it most. Nice, huh? High costs and holes in the system mean more than 1 in 7 of us have no health insurance to protect us at all. Many more struggle to pay their bills and can only afford bare minimum policies that may not cover much. High cost to households, strain on the federal budget, and people with no protection. It's easy to see why many people were looking for something different. So here's what the health reform law plans to do in its first phase between now and 2014. To start dealing with cost, insurers will be limited in how they spend our premium dollars. If they use too much for administrative costs or profits, they'll be forced to give some of it back through rebates. This won't stop premium increases, but it may help some. Some services will become free in all new private insurance policies and in Medicare, preventive care like screenings and vaccinations. People on Medicare, because they're over 65 or disabled, will get more help with their drug cost. Young people can save money and stay insured by remaining on their parents' policies up to age 26. And some small businesses will get tax breaks to help them pay for health insurance for their workers. And the holes, well, some will be closed starting now, too. Lifetime limits on health coverage will be gone, whether you buy your insurance on your own or get it from your employer. And it will be illegal to turn kids down for having a pre-existing health condition like asthma or diabetes. Of course, some adults who buy insurance on their own will still be getting rejected between now and 2014. Those who do can enter something called a high-risk pool run by the government. No, it's more like a policy that covers the sickest uninsured people, meaning it's riskier for insurance companies. That's why the government will chip in some money to bring down the cost. Some say these high-risk pools will help a lot of people. Others say the pools will still be too expensive and may not have enough government money to stay in business until they're replaced by something better in Phase 2. On New Year's Day 2014, some big changes kick in. First, let's look at how the law makes healthcare more affordable. Medicaid will be expanded to cover all low-income individuals and families in every state. And depending on what you make, if you lose your job or your employer doesn't provide decent coverage, you may get a health insurance tax credit. And while most of us will continue to get health insurance at work, just like now, if you don't have that option, you'll be able to buy coverage in what's called an exchange. You'll be hearing a lot about them, so let's stop and look at how they work. An exchange is like a virtual insurance mega mall. Based on where you live, you'll get an easy-to-understand menu of options to compare plans in plain English, and the exchange makes sure insurance companies compete fairly under strict rules. The idea is that by giving consumers good information, a fair playing field, and access to lots of choices, competition among insurers will keep rates competitive.
Okay. That's right.
Now, on to plugging the holes. In 2014, insurers will no longer be able to turn people down or charge them more if they're sick. You might say, hold on a minute, if I can't be turned down or charged more, why not just wait until I get sick or injured to buy insurance at all? Not so fast, buddy. See, with few exceptions, people will be required to have insurance or pay a special tax. Same with larger businesses, who will pay fines if they don't insure their workers. Of course, nobody likes being told they have to buy anything, but without this rule, experts say you can't require that everyone be eligible for coverage. Imagine telling home insurers they have to cover people whose houses are already on fire. So the government will provide credits, expanded programs, and new rules. They say that by 2019, 32 million of us who don't have health insurance will have it. Some of those who will still be uninsured, undocumented immigrants who aren't eligible for coverage under the law.
The Affordable Care Act gives small business owners some immediate help in providing health coverage by giving business tax credits of up to 35% of the amount they pay in insurance premiums. That's right, tax relief right now to pay for health insurance for your employees. Here's how it works. Businesses are eligible if they employ fewer than 25 full-time equivalent workers, and those workers are paid an average annual salary of $50,000 or less. Credits are calculated based on the number of workers and their average wage. There's more good news. This tax credit goes up to 50% of premiums in 2014. As more of the new law is implemented over the course of the next few years, other new options will open up for small businesses. Starting next year, 2011, government grants will be available for up to 5 years to eligible employers to establish wellness programs for employees. And small businesses will be able to offer cafeteria plans, so workers can put pre-tax earnings into accounts for medical expenses. Looking ahead to 2014, small businesses will be able to buy insurance through competitive exchanges, giving them the purchasing power of a larger group. They'll have a wider choice of affordable plans, the same choices as members of Congress have. Plans that compete in exchanges will provide your employees the new benefits and protections available to those who work for large companies. If you can't afford to offer health insurance to your employees, starting in 2014, they'll be able to purchase their own health coverage in the exchanges, and they may qualify for tax credits to help them afford it. If you already have health coverage for your employees and you're happy with the plan, you don't need to make any changes. The Act still benefits you. You may qualify for the new tax credits, and you and your workers will have the security of knowing that their health coverage can't be canceled because of an illness or accident. As of September 2010, there will be no lifetime limits on the amount an insurer will pay, and annual limits will be restricted for employer plans. The Affordable Care Act was designed to help people like you, small business owners, and put you back in control of your own health care. It will help expand health care coverage for your employees, lower your costs, and improve the quality of the care that you and your employees receive. Find the information you need to make smart health coverage choices for yourself, your employees, and your business or nonprofit on this website.
Well, most employers were already assuming that this was going to be upheld at some level, and certainly the key provisions that have impacted major employers, they've largely started to put things in play. Now, this really takes away the uncertainty going forward. They're going to have to think through the issues that are going to hit in 2014 and beyond. Really, it's the state health insurance exchanges that are where the action is. That's where the subsidies are going to come into play. A lot of new money coming from the federal government to help employees or people without coverage through their employer get coverage. Major employers and especially smaller employers are going to have to think about, do they provide coverage going forward, or do they potentially allow their employees to get their coverage through the exchange? Probably those with employees with lower paid workers may be more inclined to let them get it through the exchange because that's where the subsidies are the greatest. But it's not going to be a one-size-fits-all. Employers are going to have to think this through in terms of what do they want to do for their employees long-term, how does this fit into their overall human resource strategy, and specifically, where do they see themselves around in supporting healthcare benefits over the long run. Employers have had to react to health reform already. The first wave was really a series of benefit enhancements that became available to employees across the country. Things like age 26, people being able to cover their adult children under their plans, elimination of lifetime maximums. The second wave is some more compliance-oriented requirements that employers have to bring themselves into compliance. And those are things that now are getting solidified as a result of this decision. And the third wave really comes in terms of access. That's the 2014 changes. Employers are going to have to make significant decisions around what is my role around health care, and do I expand my eligibility to make sure I avoid the penalties that would otherwise apply, or do I potentially let my employees go to the exchanges?
In our ongoing installment on healthcare, we meet Dory Prybudak, Human Resources at Polymorph Technologies Incorporated in Newark, Delaware. As someone responsible for taking care of company insurance policies, Dory has to explain to employees how healthcare reform affects company policy.
We just inform them of, that these are the changes that are part of the law that you're now eligible for, or we're now required to do. But with that, it's also, some of these things also do require an increase to compensate for them, which is unfortunate. But, you just have to be able to be rational and explain if there's an increase, why there is an increase without being overly political. You kind of have to play, devil's advocate on everything you do and be able to just educate your employees of what your plan is, why there are these changes, and how it affects them. And at the end of the day, your employees are, what we think about most, and we want to be able to provide them with good insurance.
The government is offering exchanges, which are healthcare programs offered by the states to companies and individuals for a fee. For Polymorph Technologies, the new healthcare law will change their approach to company policy.
Only for us, we're self-insured here, which means that we pay, as opposed to paying just a set premium, we pay based on every claim. So every year we don't pay the same amount for healthcare, and the concern is that the healthcare costs are going to rise as more and more things are mandated and more things are required. And the biggest concern is that a lot of these things that they have plated for 2013 and 14, there are no guidelines and explanations. So
Polymorph Technologies self-insures its employees, and in Dory's opinion, the new law creates uncertainty.
Part of the problem in Delaware, there's very little competition among insurance. There's very few carriers here. So in a sense, it could be nice to have an exchange, but then you also fall into this, what is the exchange, and how as an employer are you going to be charged? And the way the current bill is written, depending on where you fall on an annual income, you may have an opportunity to opt out of your employer's plan and go into the exchange.
Overall, Dory says the uncertainty is not good for business.
One of your advantages and one of your selling point as a company is your total package, your benefits, and you want to be able to have competitive benefits. And for us as a small employer, because we don't know how it's going to impact us, and because the mandating of what they want us to do, it's going to affect us as how we play in the market against other companies and other manufacturing companies in Delaware.
In Newark, I'm Sam Friedman.
The highest court in the land has now spoken. We will continue to implement this law, and we'll work together to improve on it where we can. But what we won't do, what the country can't afford to do, is refight the political battles of 2 years ago or go back to the way things were. With today's announcement, it's time for us to move forward, to implement and, where necessary, improve on this law. And now's the time to keep our focus on the most urgent challenge of our time, putting people back to work, paying down our debt, and building an economy where people can have confidence that if they work hard, they can get ahead. But today, I'm as confident as ever that when we look back 5 years from now, or 10 years from now, or 20 years from now, we'll be better off because we had the courage to pass this law and keep moving forward. Thank you. God bless you, and God bless America.